Okay, what we're going to do is, first of all, we are on 12-5 of Chapter 12, but I want to go through a quick review of what we've done so far in Chapter 12 and previous for that matter in a partnership. Chapters 10 and 11, we've talked about 5 different journals. We've talked about the cash receipts journal, cash payments journal, general journal. We've also talked about the purchases journal and the sales journal. So every transaction that we record first goes into one of these journals. Okay, and this was chapters 10 and 11. 12-1, just a quick review from posting from any journal to your ledgers. Now 12.1 and 12.2 dealt again with accounts payable only. Accounts payable means that we purchase something on account. We owe them money at a certain date, whatever the terms are. So you see posting from a purchases journal to an accounts payable ledger. This is a subsidiary ledger account. Here is the vendor number, which is the vendor number means that instead of customer number, accounts payable deals with vendor numbers because we're purchasing from vendors. Okay, so this is vendor number 240. What we're going to do is from the purchases journal, and this is again posting from a purchases journal to an accounts payable ledger. Purchases journal means that we recorded or we purchased merchandise on account. We purchased from a vendor the merchandise and we're going to turn around and resell it for a profit. That's the whole point of our business. So we purchased from Regal Designs on the 19th of this month. Here's the purchase number that would be on the invoice. And again, purchases is debited and accounts payable is credited. Accounts payable is a liability. Therefore, it carries a normal credit balance. So in the purchases journal, again, there's only one column here because it only deals with one type of transaction. We purchase merchandise on account. If it says that, it goes in the purchases journal. We keep a running total of every date and every company that we purchase from, and then at the end we add it up. When transferring this to the individual ledger accounts, we're going to put the date, we're going to put the page number of the purchases journal, the credit amount, because accounts payable credit right here, and then we're going to add it to our normal credit balance. This is what we owe them total. If we were to pay them back and it was recorded in the cash payments journal, there would be a debit here and we would subtract from the total of what we owe them. So that was it. That was it for 12-1, transferring from purchases journal to individual subsidiary ledger accounts. 12-2 dealt with still accounts payable ledger accounts. These individual accounts right here, there might be many. There's probably 10, 12, maybe there's 2, 3, doesn't matter. We're gonna number our vendors. Okay. So in a cash payments journal, what this means, if you see an account right here that's recorded in the accounts payable debit, then that must go in the accounts payable subsidiary ledger. So you can see with check number 291, we wrote a check for $776. It's always going to be cash credited in a cash payments journal because cash is an asset. When we credit cash, that means we're taking away money from our checking account. We're paying something. We're paying somebody in a cash payments journal. So we're taking that $776 in the accounts payable debit column, and we're going to transfer that down here to the debit, which puts our credit balance, puts our balance at zero. It means we no longer owe Electrographic Supply any money. Now, if we look at a general journal and you see this and you see an accounts payable, here we go, Graphic Supply, we're credited that accounts payable account. And looks like we, as an asset, this is in the general journal, we purchase supplies, office supplies. So here's our asset, here's what we have in supplies. However, in the accounts payable column, we owe them money. And the reason that this is not in the purchases journal is because it is not, we didn't buy merchandise. We bought supplies. We're going to use these supplies. We're not turning around to sell these supplies, whether it be paper, printer toner, printers, computers, software, anything, toilet paper. We're going to use these supplies. So it's not something that we're reselling. Hence, therefore, it's in the general journal. So when we have a credit, which means we pay, or I'm sorry, that means we bought something on account in the general journal, supplies for this matter, we're going to record this in the general or the accounts payable subsidiary ledger on the 26th, and we're going to credit that account. That means that we now owe them $2,544. This was all of 12-2. This was it. So everything relates to accounts payable, people that we owe, or companies or businesses that we owe money to because we've either purchased merchandise in the purchases journal, or we paid them back in the cash payments journal, or maybe we purchased supplies instead, which would not go in the purchases journal. It would go in the general journal. Finally, 12-2, we prepared an accounts payable schedule of accounts, which was all of the companies that we do business with, all of our vendors, and how much money we owe them at the end of the month. We're going to single rule, we're going to double rule, put the total here. So our liabilities are $8,224.20. Again, accounts payable is a liability. That means it carries a credit balance. You don't even see credit or debit up here because we know that it's the schedule of accounts payable. These are all credits. We owe this amount of money at the end of the month. 12-2, 12-1, all taken care of accounts payable. As we move on, 12-3. 12-3 talks about accounts receivable. Anything that we sold to customers on account or they are paying us back. So 12-3, if it's in a sales journal, that means that we sold to a customer merchandise on account. They're going to pay us at a later date. So you're going to list all of those transactions in the sales journal. This is going to come off the invoice, our sales invoice. We're going to have and many of you messed this up on previous chapters and on tests, is the accounts receivable is the total of what they owe us. The sale is the actual cost of the merchandise plus the tax, the state tax that they have to pay on merchandise, which in the chapter refers to 8%. So we would take this amount times 8% to get this sales tax. They owe us the total of those two amounts, which is the total amount of the transaction. Now taking this transaction and putting it into the accounts receivable subsidiary account. So every instead of vendors, we now have customers, and each customer has their own number as well. We might have a balance here, but here's how we're going to post this. On the 20th, take the date from the 20th. We're going to put the page number, sales, this S10 means sales journal, page 10. We're going to debit the amount of $576.64, which is the total from the accounts receivable. This is the amount that they owe us at this time. Now they already had a balance. They already owed us $212, so now they owe us $788.64. This, again, accounts receivables are asset accounts. Therefore, they carry a normal debit balance. It's worth something. They owe us. We don't have the cash right now, but they owe us this amount, and maybe even more amounts if they purchase more within this month. This is what they owe us. They're running total. Now, 12-4 deals with them paying us back. So you're going to notice in the cash receipts journal, which again, cash receipts means that we're receiving cash as a payment or credit card sales. So on the 21st, you see Alfredo with receipt, because when they pay us back, we give them a receipt. Every time you go to the store or the mall and buy something, they give you a receipt. Same thing here. Customers buy from us, we give them a receipt. So receipt 104, you see the accounts receivable credit is $254.40, which means they paid us $254.40. There's nothing that's going to go in these two columns for this transaction. Of course, cash debit in the cash receipts journal, there's always going to be an amount here too. That means that we're adding to our checking account, or we're adding to our cash account. So how we record this in an individual subsidiary accounts receivable account is we're going to write the date, we're going to write the page number of the journal that we got it from, cash receipts, page 12, CR 12. We're going to credit their account because this is what they paid us, and we're going to subtract it from the debit balance because accounts receivable, being an asset, carries a normal debit balance. So now if we subtract this, we get now that they owe us $1,272. So a brief review of what's going on in chapter 12. It's a long chapter, and it all has to do with taking what's in the transactions that we recorded in our journals, posting them to our ledger accounts. Accounts payable and accounts receivable both have individual subsidiary accounts for each vendor that we buy from and each customer that buys from us. Now we get to 12-5, and what happens is, especially in cash account, you're going to run out of room, and you're going to need to start a new page. So when you start a new page, and what I'm going to do is I'm going to work through one of the transactions at the end of this chapter in order for us to complete this. So first thing is you're going to write the account name. You're going to write the account number. This is our ledger. These are our books. We're going to write the date. We're going to write the word balance. We're going to put a check mark here or mark it black to know that we don't need to post this amount. And we're going to put the amount from the previous page. So here's what I want you to do. I want you to open up or download the general ledger accounts. And the first thing I'm going to put is account name. I am going to put here supplies office. My account number is going to be 1145. Now the balance, we're going to put the date or the year here, 2014. We're going to put November. We're going to put the date of the first, the beginning of the accounting cycle for our business. Again, this is the next page in the office supplies. The whole year, these ledger accounts continue to add up. They don't just disappear. October's ledger account doesn't disappear. We need to carry it over from month to month. So at the end of the year, we know how much money we owe, we know how much money people owe us, and we know how much money we've paid. Again, either a check mark or what's easiest is just to fill that black. For the balance, carries, since this is again an asset, accounts receivable, we're going to carry a normal balance of $6,473.60. Now again, what I want you to do is I want you to select from here to here, and we're going to apply the accounting number format so that it appears correctly. Account number 2, we're going to open up the supplies store. So we have a ledger account or an account for our office supplies, which again might be our pens, pencils, paper. We might also have supplies for our store, which would be cleaning products, toilet paper, things that are going to help maintain our store. The account number here is 1150. Again, we're going to put the date here. We're going to put the month. We're going to put the day, balance. Post ref, fill it with black. That way we know not to post it. And again, this is another asset account, so it always carries a normal debit balance. We're going to put 4302. 0 cents. Again, select these cells, apply the accounting format to it, and let's just do it to these cells as well. There we go. Finally, account is our accounts payable. Now, all of our subsidiary accounts payable accounts fall under this general controlling account, which is what we've talked about in 12-1 and 12-2. Our account number is 2110, year 2014, November 1st, balance, fill this black. Now, accounts payable is a liability, not an asset. These are things that we own that are worth money. Therefore, it's an asset. An accounts payable is someone, we owe them money. So therefore, it's going to carry a normal credit balance. So in the normal credit balance, we're going to put $8,224.20. You'll notice that it automatically gives me the dollar sign, the cents is all correct. Here's what I'd also like for you to do. I want you to highlight each account name, and I want you to bold it and apply some type of highlight to it. That's text color. Actually, let's just make it bigger. Maybe fill the cell with yellow. There we go. Actually, if we hit Format Painter, we can click that cell and it'll do it for us automatically. So I'd like for you to do that at this time. I also want you to make the account number bold. That way it sticks out. We can easily see it. There we go. So this is what your document should look like so far. So again, starting a new ledger account, this is what we just did. We're going to write the account name, the account number of the ledger number. We're going to write the date and the year, or put it in our spreadsheet, whether we're using Google Docs or Microsoft Excel. We're going to write the word balance. We're going to fill this in with black or put a check mark to note that we don't have to post, or this won't have a post reference number. And we're going to write the balance here, whether it's a debit or a credit, depending on if it's an asset, liability, or owner's equity. Remember that assets always carry debit balances, liabilities always, and owner's equity always carry credit balances. Expenses and drawing accounts carry debit balances. So we're going to move on to the next section here, and that is posting from a general amount columns of a cash payments journal to a general ledger account. We're going to have many general ledger accounts, okay? And I just want to show you real quick the journals that we have. You're going to notice the cash receipts journal carries a general debit column in that journal. Cash payments journal also carries a general debit and credit column. And of course the general journal, which we've dealt with since chapter 1, only has the general debit and credit columns. You're going to notice in the purchases and the sales journal, there is no general debit and general credit column. And that's because it's only these two accounts affected. Only when we purchase merchandise on account is going to be recorded in the purchases journal. And whenever we sell something on account, sell merchandise to our customers on account, it's only going to be recorded in the sales journal. So only these accounts are affected. Accounts receivable, sales, and sales tax. Anything else, these other three journals carry a general debit and credit column. So this has to do with any journal, for that matter, with a general debit or general credit amount in those columns. So you see, first, of course, we're going to put the date in the ledger. Notice that there's a balance already of $154,000 of purchases that we've made this year so far. We're going to put the date in November, It comes from Cash Payments Journal, page 21, which is here. We're going to record the debit amount in the debit column, which purchases carries a normal debit balance, because remember, purchases is something that we have, so it's an asset. So this is what we're worth in purchases for the year. Now, recording this, how we're going to do this is I'm on your own on page 295. I'm on number 7, which says to post the November 16th general debit entry of the Cash Payments Journal, which is this right here, Cash Payments Journal, page 16. Here's the 16th. We have a general debit amount of $78.30, which means we bought supplies with cash. And I'm going to show you how to record that in your ledger. So, supplies store. First thing we're going to do is we're going to go down to supplies store, and we're going to put in the date of the 16th. Next thing, we don't need to put anything in this item because we know what the account is for. It's store supplies. Post reference number is going to be Cash Payments Journal 116, which came from this right here, page 16 of the Cash Payments Journal. We're going to write the debit amount of $78.30. Since we've already formatted this, it's going to format the accounting format of that. Now, what we can do, again, as a formula to automatically add this so we don't have to put anything in here, is if we put equals this plus sign, which is shift plus sign, click that cell, so you have H20 plus F21, you hit enter, and it adds it up automatically for you. And then we can drag this formula down so that anything we add to this will change this amount. So then we're eliminating a step, basically. So now our ledger for store supplies carries a balance of $4,380.30. Pretty simple. Next thing we're going to do is we're going to post the November 27th transaction, which is right here from the General Journal to General Ledger accounts. So obviously, being from the General Journal, we're going to have two accounts affected. We're going to have our office supplies and our accounts payable of electrographic supply affected, $160. So we're going to come here, and the first thing is we bought supplies, which is an asset, on the date of the 27th. Post reference is the General Journal, page 12, so G12. We had a debit amount of $160. And again, we can put that formula in of equals this plus this equals that. Drag it down. We have our running total. The other account affected in this transaction was the accounts payable for electrographics. Now, since it's in the General Journal and not the Purchases Journal, we need to record this amount in the accounts payable general ledger. So we're going to come down to the ledger account. Again, we're going to put the 27th. Came from General Journal, page 12, just like this transaction. And of course, debits equal credits, so if this is debited in this transaction, we have to have a credit in this transaction, and it's going to be $160. Again, accounts payable is a liability, which carries a normal credit balance, so it's always going to be in this column here, equals this plus this equals, here's our running total, and again, we drag it down, then whatever amount we put in here will change this total here. One last thing we're going to want to do is once we've posted, especially from a general journal, and you notice that we have the accounts payable account with the vendor number. This isn't a customer, this is a vendor, someone that we bought from on account. We're going to want to post once we posted it to the ledger, we want to go back to the journal and we want to make sure that these numbers are posted to the general journal, or any journal for that matter, to prove that we posted it to the ledger. And this is to double check our numbers, and if anyone else in our company or business is looking at our documents, it proves that those have been posted. So we're going to go back to the journal as our last step, and accounts payable, the general ledger number for our accounts payable is 2110. Okay, the account for our vendor number for Foxfire, which is our subsidiary account of our accounts payable, we might have 10 of these under accounts payable. This vendor number is 250. So that's why you have this dash, or this line here, to separate that we have the accounts payable ledger number and also the subsidiary ledger number of this vendor right here posted to our general journal. That's the final step. That proves, again, that we've posted it to our ledger. If you have questions, you might want to refer back to this video or hit pause, especially if you're doing the transaction. This is where I took my information from to post to the ledger. And again, you might want to push pause here too to see what it should look like after completing this assignment.